Hello and welcome to this special broadcast on DD India. I'm Prasar Bharati. India's financial markets are witnessing an unprecedented phase of growth and transformation, even amid a rapidly shifting global landscape. Reflecting on a year of key reforms, efforts to strengthen market stability and measures to safeguard investor interests, the chairperson of the Securities and Exchange Board of India, Tuhin Kanta Pandey, joins us to share his perspective on the road ahead for India's capital markets. Take a look at this interview. Namaskar.
India's capital markets stands at a defining moment marked by a record number of retail participation and ever-evolving geopolitical challenges. We have Tuhin Kanta Pandey with us, the chairman of Securities and Exchange Board of India. As you complete 1 year in office, what would you term as the most significant achievement in this year?
I would say that, this year was quite a challenging year, as you pointed out, yes. Full of geopolitical risks and volatility and external policy shocks. I think a lot was done internally within the government to have different policy stances which facilitated economic growth of considerable. There's 7.3% predicted this year. Within these challenges, I would say that our focus has been on what I call optimum regulation. Not too much of regulation, which will not be good for business, which will not be ease of business, which will also increase compliances. But at the same time not have under regulation where we will build the risks which are unnecessary, and with focus on our three mandates very clearly on investment protection, on market development and market regulation.
As we're talking about these global challenges, but Indian markets have shown resilience. What in your view the SEBI has done to give us support, to give a safety net to the markets?
So one, SEBI has and its market infrastructure institutions provide a very robust market infrastructure anywhere in the world, technologically and also from the point of view of investor protection. Our system in India is pretty unique in many respects, where exchanges, depositories, clearing corporations are interlinked, interoperable. And also we are able to do a segregated structure where every client account is mapped, which means that the client securities where they rest with the clients and the funds which are upstream to the clearing corporation and the securities after transactions are directly credited from clearing corporation to the client's accounts. The Demat accounts, we have 210 million Demat accounts, 21 crore. We also have about 14 crore unique investors and growing. So this is a very big network, and of course there have been also many efforts on behalf of SEBI to safeguard investors from different things. One is facilitating investments. Another is safeguarding investments, even pre-investments. As you're aware, we had this number of scams is also happening where many unauthorized people, fake accounts, fake apps, and they are able to get the money from people citing high returns. The money doesn't actually enter the stock markets. They are actually siphoned off. These are cyber scams. In order to prevent, we have done a unique tool called SEBI Check. This is in our app, which is Sarthi app. This is anytime, the first time any regulator would have come with this kind of facility. Within 30 seconds, anyone who is interested in investing in the stock markets or being asked by any intermediaries, I would advise that every person must check whether the QR code or the UPI address or the bank address where the money is sought to be credited, in that SEBI check. Within 30 seconds, you will come to know whether this is valid or not valid. With this protection only, they should move forward and not to deposit money here and there in fake accounts.
As the retail investors are growing, new investors are coming in, what is the kind of support or the kind of environment that we are creating so that they are not getting scammed? They are not getting lured by those people who are saying that we'll give you fast returns, we'll give you double returns in lesser time.
So that is why it has to be really avoiding those people, because these are unauthorized people. Anybody claiming these kind of fixed high return, guaranteed return in equity markets are actually not the authorized ones. We have also launched a very big enforcement action against many of the finfluencers and the sites of the nature that you are talking about, if they are propagating in the cyberspace. So we have developed an AI tool called Sudarshan, through which we are able to, based on multilingual audios, videos, text, we are able to scan the cyberspace and then remove those sites, ask platforms to remove those sites. Now we have our average such rate was about 5,000 a month, which is now, after the deployment of AI tool, has risen to 7,000 a month. So we do really do a lot of cleaning up from the cyberspace. But as you know, the things keep cropping up there, but we will relentlessly go against them, and our tool actually enables us much better now to do a faster cleanup operation. Apart from that, we are also running awareness campaign. We had a very big campaign called SEBI versus scam. You would have noticed all the market infrastructure institutions combined together and ran that campaign. We have done, comic book series. We have done, different kinds of things. Now we also we use, for example, on a pilot basis, the AI tool to go out to tell people, to call up people. When we call up, we use 16600 series, as you know, which are, for any service calls, you must be using that 1600 number, which will then not reflect as spam on your, device. And this one is we are able to reach out to various methods for awareness generation on a variety of subjects relating to the securities market. This particular campaign, investor awareness campaign, will further intensify under our project Jagruk, in which we are combining together again all the market infrastructure institutions, AMFI and SEBI, together to do a relentless campaign on various themes which are pertaining it. So you will get to see that also soon.
Now, coming to the IPO market, we have seen that there are so many IPOs coming in. How do you see the coming year for IPOs, and are you all considering to those norms to help them for funding for the MSMEs and also for the startup?
Now, see, IPOs is a very important market, as you know, anywhere in the world, because it's a primary issuances, and then of course FPOs, rights issues and others. The equity issuances and the debt issuances have been of the order of about 10 lakh crore on the average for the last 10 years. In last 10 years, 105 lakh crore has been raised through debt and equity issuances in the Indian capital market. The year, which is the current year also, we are clocking up as number one. Like they measure it on calendar year basis. So in the calendar year 2025, India was number one in the world in number of IPOs, which was in excess of 320. And we had number 3 position in terms of value. And this is also was in 24. So we are able to successfully have so many issuers coming in and raise the money, and a variety of institutional investors, including FPIs, domestic institutional investors, as well as retail participation has been there. Now, when it comes to startups, etc., there are different kinds of funding. Many of the funding is done by the private equity. There is also AIF industry, and alternative investment fund industry has grown rapidly in India. It is now about 6 lakh crores of investments and about 14 lakh crores of commitments, which was about 1 lakh crore in 2019. So there is a very 30% growth CAGR in this industry. This supports with private, unlisted space, also in listed space, in equity as well as private credit. Many of the, our startups are nurtured through that. And of course, there is also, when they come and come to the public markets, they are able to, use the IPOs to get them listed and raise further funds and become public companies, public listed companies. So this is like a cycle where some of the privately held companies and privately developed companies, after 7, 8, 10 years of work, when they actually, get certain size and the brand and a success, could then come to demonstrably in a market and get successfully listed. We also have instances of reverse flipping, where many of the companies who were there in other jurisdictions, they are shifting their incorporation into India in order to use our capital market. The capital market runs on strong foundation. The foundation is actually the consistent growth, low inflation, and fiscal consolidation. These are all the major macro fundamental factors which are quite in good shape for an Indian economy, and Indian economy offers a very large economy and still offers a very consistently very high growth, and along with inflation control and fiscal consolidation. So these are foundational factors which make capital market attractive from the medium to long term basis.
So you've listed out all these factors that why India is the preferred destination, but going forward, what steps SEBI would be taking or is taking to strengthening this position of India as a global investment destination?
Well, I think India is considered as a very important destination already and continues to be as we grow along, and it offers a wide range of services, offers wide range of sectors, it offers very good domestic demand, as well as of course a place where so much of production across goods and services can take place, including on a whole range of new age industries which are coming up fast. So going forward, we will expect, as are some of the new age industries in silicon, on EVs, on batteries, on critical minerals, on chips, these could be then, once they mature enough or ready enough, they could also come to the capital market to give opportunity to other participants to participate in their shareholding.
As we come to the end, what would be your one message to millions of small investors who are looking at India, who are looking at these capital markets? What would be your message to them?
The message is that one should stay for the long haul. It is a long-term investing that compounds. People should not be really coming to the capital market for merely one-day listing gains, listing pop-ups in IPOs, or really remain short-term, or they should not get into unnecessarily into the derivative markets where they do not have actually sufficient knowledge about and resources enough to sustain the kind of participation qualification which is required to participate there. They should also see that to do a due diligence in whatever they do, and their own research, which is so much is available today. Then you have pooled vehicles available. The pooled vehicles like mutual funds are available, where at least you have a mutual fund is a highly regulated industry. So therefore, there will be fund managers, professional fund managers to help you out with. The SIP investing is one very good way of investing, where you are not taking a lump sum call, but gradually on a disciplined way you are able to do that. I think a disciplined investing, long-term investing, and a balanced portfolio where you are reconciling as per your own life goals. You are able to bring both fixed income, equity, maybe REITs and InvITs and other instruments in right proportion according to your own situation, life situation. That will be a good, and what is basically is this financial planning. We also have registered investment advisors, SEBI advisors, all of the registered intermediaries, etc. We should really not look, we should really see whether they are fake or otherwise. So it's very important that they are checked online in our systems, in our websites, on exchange websites. The apps are whitelisted, apps are there. We are also working with platform providers. The Google has agreed that the only whitelisted apps will be available in the Play Store and with a certain mark. So once we achieve that, we are also persuading Apple to also follow suit. The other part is that we should always look at for our advice. Whenever we have the depositories give a lot of advice, the exchanges give advice, and mails are also sent. So better not to ignore these things as routine. There's a lot of information there, a lot of protection measures are there, and there should be a guide, taking a due precaution of their money.
SEBI, the Indian capital markets are strong and lucrative, and SEBI is doing everything to protect the investor, including the new investors who are coming into the market. A strong, balanced fund portfolio and also a disciplined long-term process is the way forward. Thank you for watching. Namaskar.